everyone, and welcome to another episode of Business and Beyond's Feature Friday with Tania Bartolini, your host. I am so excited that we're here today because my guest today is Kris Schumacher. He is a business owner and investor focused on modernization of traditional Main Street American industry. As the CEO of Trellis Structures, a 30-year-old architectural woodworking factory, Kris made the leap from a 20-year career in corporate pricing economics to owning and operating a physical manufacturing plant. In addition to running the factory, Kris is a co-founder of New Majority Capital, where he leads due diligence for small business acquisitions. And don't we all know how important due diligence is when you're acquiring a new business? So his approach is defined by my favorite, educated risk taking. Education is number one priority in my life. So I love that. And a hacker's ethos. So early in his career, he ran a disruptive technology house that outcompeted much larger firms through lean innovation. Today, Kris uses that same tenacity to bridge the gap between high-level financial rigor and the hands-on reality of the factory floor, identifying operational value where others only see spreadsheets. So, Kris, thank you so much for being here with us today.
Thank you, Tania.
So, can you tell me? I mean, you have a woodworking manufacturing company, and then you have New Majority Capital. What industry is that really in, and why did you get into it?
It's both custom manufacturing. So we at Trellis Structures, we manufacture garden structures, arbors, trellises, custom pergolas, custom gates, both out of wood or metal actually, but primarily wood. And I would say that's a custom manufacturing industry very closely related to the construction industry. We sell to architects, contractors, and homeowners as well, landscapers. So very construction related. And on the New Majority Capital side, it's financial markets. We're a fund and we're an education platform. So we train entrepreneurs how to acquire businesses, how to do due diligence, how to negotiate, how to find the right business for them, and how to run the business successfully once they acquire it, and really kind of de-risk the acquisition for them, because we see that small businesses are changing hands at record rates, right? So we started this right now in the wave of the silver tsunami, which is, as you're probably aware, the retiring of baby boomer business owners over the next 10 years, and really looking to preserve those businesses and make sure that that they do transition to new owners successfully, and that a broad group of people outside of just the elite MBA students get access to the tools to let them acquire these businesses and use them to as a wealth generation opportunity. So we run accelerator programs all around the country. We've trained over 450 students. And from our cohorts so far, I think there's been 45 acquisitions, of which we've directly invested in 11 of them.
Nice.
And so so what industry does New Majority Capital? It's all industries, like anything, any small business we're interested in, as long as it's a good business and and it's risk mitigated and it's not going to crash when the economy crashes.
See, and so one thing is you said education and due diligence. And as an attorney, those are songs to my ears, right? Because due diligence is so important important, especially whether you're buying a house or a business or anything really, because you need to know what risks are you incurring, what is it that you're buying, right? So I
Yeah.
love that you have this education first mentality. But in your intro, you had a 20-year career in corporate pricing economics. And so how did that come about? What made you go into manufacturing? And then what made you go into basically venture capital?
Yeah, and I'd even say that probably prior to my 20-year career, I was I started out in a startup in the film industry. My father, when I grew up working for my father, who was a contractor, and we had a tree farm, so we did a lot of work with milling our lumber and doing carpentry work. So that was always kind of close to me from the beginning. And after I got my MBA, I worked in the film industry for a few years, and I realized, you know, I, that I didn't want to pay my dues for 30 years in the film industry, grinding away. And I saw that the people who were calling the shots were mostly investment bankers who were, you know, who had made their money, and now they said, "Oh, let me make a film for fun." And I was like, I don't want to do this. I want to, be able to control my own path. So let me understand a little bit more about this business stuff. So I went and got my MBA, and I have a natural affinity for complex spreadsheets and making connections and pricing is kind of the nexus between um, manufacturing, product, sales, customer, finance. It kind of sat in the middle and really was the place where kind of the value of that the company created was proved. So to me, that was a natural kind of fit. I built the pricing department at a few different large organizations. There's a lot of challenges that were good challenges. I should call them opportunities. But at the same time, I'm not a corporate person. It's not in my nature. I naturally, have a bit of ADHD, and I am not, you know, capable to climb the corporate ladder all the way to the top effectively in a way that could help my sanity. So I or that could keep me sane. Let's put it that way. And so I have always been even when I was in the corporate world, I've always been consulting with startup founders. I help people get their Series A, get scale their companies, launch products, acquire businesses. I kind of sat as either a consultant, an advisor, or a fractional CFO. That was just my side hustle that I did for fun. And when COVID hit, I realized, I really need to make this more my core job, and I need to step away. I can't do the corporate rat race anymore. My salary was good, but I was making more than I needed. So so I stepped back and, took the plunge into full-time entrepreneurship, really starting two businesses at once or acquiring Trellis Structures, which I would say I was, immediately attracted to when I toured the factory. It and we talk about due diligence. Maybe I didn't do as much due diligence on the cash conversion cycle as I should have. I was I had worked in the construction space before, so I thought I understood it, but I didn't work at the level that we're operating now. I worked, with small GCs and my dad was a small GC, um, and and sorry, and
Girl, what?
Yeah, it's fine. I just had a interruption in my office, um, but no, I had worked with small GCs. My father was a small GC. I worked in kind of residential home building, but I did not, I have not worked with large general contractors and large construction projects up until 4.5 years ago, right? So that understanding was something I learned quickly, and it would have been better to be aware of it before I had acquired, so I could have, maybe rethought how I financed how I financed the business. But that being said, I took a tour of the factory, saw the products, and that was really, all it took. I mean, the products we make are incredibly beautiful. There's, there's not really, I should say, there's not really any competitor out there doing the quality of work that we're doing, which is, handmade, outdoor, rot resistant wood products that are built with a finish that's equivalent to high end interior furniture, right? It's really, top quality stuff. And if you are, you know, into woodworking like I am, right, then it immediately kind of calls to you, right? So to me, I saw a huge product catalog that the previous owner had made. I saw a lot of opportunity to grow this in a more structured way, and with more of a business focus. The previous owner was an artist. He was a furniture maker. He built a big catalog, but he didn't really know how to sell his work. Um, Website was made in 1990. They did their e-commerce sales were, you
So
know,
I'm going to stop you there for a second, okay? Because I want to share. So you have this unique perspective of being an entrepreneur who purchased an existing company, but also being an entrepreneur who has created a company from the ground up. And so these are two completely different models and ways of being a business owner. So I'm a little bit interested in, you know, what have you seen that both of them come with their own set of challenges? Are they similar challenges? Are they different? I mean, you've already touched upon the due diligence part of it, but as you're running the businesses, what are some of the challenges that you have seen or had to overcome? But more importantly, how did you overcome them, right?
yeah, no, it's a good question. I'd say, um, there are similar challenges, but there's also obviously differences. And I had previously, invested in, co-founded a company that went for about 4 years or so, and we had to wind it down because, we couldn't get the unit economics to work. So I had previous experience starting from the ground up. But I would say that the benefit of buying a business, which is why we promote it and why we teach it, is that it's a lower risk way, especially for people who are not right out of college and with no responsibilities, but actually have like a mortgage and financial
Bills.
responsibilities. So you don't have to start with a ramen diet. You can start with a salary, and that's a big benefit of buying a business. As you start with existing customers, existing revenue, existing brand, and infrastructure that you can build on. The challenge, for me, was a couple things. One was the cash flow issue, which again I didn't realize was as lumpy as it is, right? So I didn't realize that I could have customers that would take 100+ days to pay, and I'd have to cover the costs for that long. And that's common in the construction industry because they follow a pay when paid
Yes.
um, contracting, and that means that my customer says, yes, I approve the payment to you, but we have to wait for our client to pay us, and then that cycles through, and that can be another 45, 60 days. Um, so that has caused you know a lot of stress sometimes with my team if we're running low on inventory, and I need to wait for the next check to come in before I can replenish it. So I have to pay my team to clean up the shop for for some weeks, or it's it is we've been very careful with kind of mapping out how we control our cash flow to
Okay.
make
So
sure.
sorry to interrupt,
I'm going
but
off tangent.
right, that is a very great point that I want to dive into a little bit because even if you're not in manufacturing, even if you're not in this construction industry where you have to wait such a long time, I find that many businesses have cyclical cash flow issues or seasonal cash flow issues. Or sometimes they just have some cash flow issues because a person didn't pay, or some clients didn't pay, or there's a war going on, or whatever the case might be, right? And so I want to showcase how prevalent that is, how normal that is. And then I would love for you to tell me, as you were just starting to, how do you overcome that or mitigate that risk so that you are able to pay your team to clean up or do something else as you're waiting for those things?
Yeah, well, I mean, and this is what I'm, and this is what I was getting at. The main difference between buying a business and starting a business is because
Uh,
starting from scratch, your cash flow issues scale with you, so it's a little bit more manageable. But buying a business, you inherit the kind of the volume that you inherit, so you need to make sure you're capitalized well, meaning you've got enough cash on the balance sheet on day one that you really can map out what you should really always have. And I say this, not that I am always, not that I always have it myself, but you really should have at least a 90-day cash flow forecast so you can see, what you're expecting to come in, what you're expecting to come out over the next 90 days, and you can triage things that are important because sometimes you might be tight, and if you're tight, you may have to push back some vendor payments. You may have to push back, you know, some other payments. But as long as you are clear and communicating and you get it done, you will be the client that always pays, even if you're a month late, sometimes. But if you're consistently, delivering, then people want to work with you. And then you get to a point, the most important thing is you should have working capital lines. You should have good working capital lines, not merchant cash advance lines, ideally. Um, that's the emergency one that you don't want to pull. And I always, you know, try not to, but I've had to use them in times. And when I've had to use them, I make sure to pay them off as quickly as possible. And really, if you pull a merchant cash advance, to cover inventory or payroll, because you have a big customer check coming in 30 days. And when that customer check comes in, you got to pay it off. You can't just say, okay, now there's money in the bank. I'm good. Um, so that's the key is how you use your financing. And and like I've been guilty of using bad loans. But as long as, again, you have a path to get to a better point, and um, you want as much. let me back up a second because when you buy a business, usually you take on a lot more debt than the previous owner. Um, and so you usually have an SBA loan or a conventional bank loan, and that's your kind of baseline cash flow that you have to deal with no matter what. And so then on top of that, it's usually best when you're acquiring to have another line of credit at the same time. Um, and I didn't do that, so I had to patch together lines of credit from credit cards and everything else to get before I could get to the point where I was able to get, an actual conventional line of credit. So there are definitely lean months.
So you have a few things there that I want to unpack. One is I just want to say I also have ADHD. So I completely understand. And I think entrepreneurship is really good for people like us because we get to decide what we're going to work on when, and we have a lot more control. So we can control our focus a little bit better, right? But with that, whether or not you have ADHD, planning is the key. As you have said multiple times, as you were speaking about the cash flow, right? It's all about the planning, it's all about the projections and the budgeting and making sure you have at least a 90-day budget projection. I always try to do a year projection. It always changes. There's always variations, right? That's just a long time. But when you're doing those projections, as you said, it keeps you focused and it makes you be able to say, okay, in 90 days, I'm going to have, a cash crunch. What can I do now so that I'm not scrambling then? Right. And it just makes it so much easier to continue. So you don't find yourself in the situation where maybe you can't pay yourself. Maybe you can't pay your employees. Maybe you have to let people go. And then what are you going to do when the cash comes back and all the clients are, needing their stuff done?
Exactly. And 100% agree. And um, I would say two things to that. One is the takeaway, my biggest takeaway from my MBA program at Babson was the three kind of truisms, I guess, right? Cash is king, cash flow is queen, and the only constant is change,
Uh,
right? So these are three things that I kind of live by. So it is, it doesn't matter how well you're doing in net income if you're not generating cash.
That's right. So everybody, please understand planning, cash flow, because I think I read something where it's, you know, more than 50% of businesses that fail are failing because of cash flow issues. And so I know for a fact, I didn't think about having a credit line when I opened up my first business, right? So whether you're purchasing a business or opening up a business, make sure you have a credit line. Use it, don't use it, does not matter. Just have it in case, because more likely than not, there's going to be a time that you're going to need it. And when you need it, you're not going to be able to get it.
Exactly. That was the second point I was going to make is that if you have a seasonal business, you know, the best time to get your line of credit is at the peak when you don't need it, because then all the banks you know will bend over backwards to give it to you and say, they'll say, send us the last 4 months of bank statements, and your last 4 months are amazing, and they'll say, okay, great, here's a big line of credit. But now if you instead wait till December, if you have a summer seasonal business, and when you actually need the funds, they'll say, well, why did your cash flow that was going down so bad? We're going to give you less, right? But it's like, that's when you actually need it. Better to get the line of credit when you don't need it, because that's when you'll get approved.
Yep. And the other point that you made that I want to hone in as well is if you do use the line of credit, if you find yourself in, which you will, right, in a situation where you have to use it, that's fine. But when you get the money, pay it off because those interest rates really are gonna get you on the back
I
end,
can,
right?
oh yeah, I can tell you a specific true story that of what I did, which was I took one of those lines of credits with the specific intention to pay it off as quickly as possible as I transitioned to another debt. Um, the the interest rate was 66%. And I was like, I felt sick to my stomach signing it, but I'm like, okay, I got to do it. I just need inventory today, and then I'm going to refinance. And I actually paid it off in 6 days. And they called me up and said, wait, why are you paying it off in 6 days? What did we do wrong? It's like, you didn't do anything wrong. I know it was expensive. I just needed it to bridge. And they said, oh, well, we'll just unwind it. You don't even have to pay the fees. We feel bad. So I'm like, okay, I don't
Oh,
mind.
nice. Very nice.
So
That brings me up to I am nobody's attorney. There's no attorney client relationship with anybody, but I will say anytime you have those loans, make sure there are no prepayment penalties, right? Because had you had a prepayment penalty, that would have been hefty, right? In 6 days, it's they need to make their
yeah,
money
this
somehow.
one was the opposite. It had a prepayment discount. I was like, well, I wanted to use the prepayment discount, and they were surprised that I wanted to use it. They don't expect people to use it. So, and the one other thing, and again, I'm not an attorney, but I do a lot of contract work. But on those things, I never sign anything that has um, an assumption of judgment, and a lot of those do. And I would, that's the bottom line for me. I never will sign it. Um, and I usually tell my entrepreneurs not to get into those deals either.
Yeah, because you don't want to be dealing with someone that you don't know, you've never dealt with before. All of a sudden, they're coming after you for money, and you're like, "What is going on here?" Right? And you have no
We've seen
relationship
it.
with them.
We've seen it. I've seen it with an entrepreneur who bought a business and he used some of those loans and then they were too much and he tried to renegotiate them. And the second he tried to renegotiate them, they put liens on all of his sales and started calling his customers. Uh,
Oh my
and then
gosh.
and then he lost those customers.
Well,
And this is a big deal. So I mean, but yeah, it's just that's the direct result of they wouldn't put those clauses in the contract if they didn't want to use them.
exactly. Exactly. Right. So what you don't know will hurt you.
Yeah.
Right. So, and this is one of the reasons why I wanted to interview you because I love the fact that you're educating people on how to properly buy a business. I get a lot of deals where people are like, oh, yeah, we're buying this business. I'm like, did you check this? Did you check that? Did you look at that? No, no. Do I have to? Yes, right? Like you're getting into a marriage, into this business, right? For a long time, you got to know what you're getting into.
Yeah.
What is it going to give you? What are you going to have to give to it, right? And one of the things that you had talked about, I mean, we've been talking about the cash flow and the finances, but it's so important to plan to see when am I recuperating my investment and am I okay with that?
Yeah.
Right? Because some businesses will take years before you get any money back. Some businesses will give it back to you right away or, fairly quickly. And they're both okay. It's just a matter of what's your cash flow tolerance, right?
Yeah, exactly. I mean, for us as investors, we look at businesses where the cash flows of the business are strong enough to repay the investors in the deal within 3 years is kind of a rule of thumb.
Okay.
And in 5 to 7 years, we get our full return, right? So, but you know, payment, get 100% of our payment back within 3 years. That's kind of our back of the envelope math to say that this business can work. And I know a lot of other investors in small businesses that more or less hover around that same metric. But from an investment standpoint, yeah, it's for small businesses. I always look for deals that cash flow strongly, that you can get paid back quickly, because there's a lot of, there's a lot more uncertainty in the cash flow. Uh, there's a lot of, you lose one customer, you could lose 20%, so it, I would be wary of going into a deal that would take 10 years to pay back. Um, Unless you really don't need the money and it's more of a strategic thing, or you just enjoy it, it's a retirement type thing, you want an income on the side and it's okay. But otherwise, I would say if it's a 10-year payback, from an investment standpoint, you might be better in, like, a brokerage account.
Right. So we've talked about having some cash flow issues, which I don't know a single company that has not gone through that at one point or another. Even, 20, 30, 50-year companies will have those issues, and planning is key, right? Um, so are there any other obstacles that you feel you want to share with us, or do you want to move on to what's working?
Well, I mean, I think they're tied together, the obstacles and what's working, because to me, you know, and that, I think, is, the mindset that I always have. And I mentioned earlier when I said the word challenge, challenge, it's really opportunity. I mean, it's really the mindset of seeing challenges as opportunities. That to me, that's what I enjoy. That energizes me. And if that doesn't energize you, then it may be difficult to be an entrepreneur, because you do have constant challenges. So I think it's that's something, I try to filter for in the entrepreneurs that we invest in. Are you going to be, is it going to really, burn you out to deal with triaging opportunities or challenges all the time? And so one of our biggest challenges or opportunities, and it is both, is supply side on Trellis Structures. So we work with, we work with wood that is hard to get. It's, partially impacted by tariffs, because it doesn't, it's not harvested in the US, it's only in Canada. Um, and, it's the specific sizes that we need for large structures are hard to get. We have to order them in bulk. You have to order them sometimes 6 to 8 weeks in advance. And, it's a big challenge, because any other wood that's out there doesn't perform as well, right? It's just, it's a Western red cedar, and it is, it has a vertical grain with no knots. So it's lightweight, it's easy to work with. It lasts 20, 30 years outdoors without a problem. And, it doesn't need to be treated. It can just be left to weather and turn a nice silver patina. And other wood species, that may last outdoors are either, you know, um, illegal to harvest, meaning like old growth teak or something, or from protected rainforests, or woods that have knots in it that cracks and checks, and this could be okay for rustic structures, but we are building kind of furniture grade stuff. So it's a challenge for us, and it's a challenge because last year, and it's again tied to things that are good. Last year in particular, I redid the website, I rebuilt our catalog, I revised our marketing, and I got our direct to consumer sales up like 300% growth. Because I
Nice.
want our direct to consumer sales to be like over 50% of our business, because that gives us a nice steady cash flow. Um, But the problem was 300% growth means, you know, I have the physical capacity, but I can't push people, I can't push the product through fast enough. I don't have the wood. And, it means long lead times. If someone orders a custom thing, it could take them 8 weeks, or sometimes, even twice that, depending on, the specifics of what they're ordering. So, this is, you know, we have a lot of untapped demand that if I could, if I could deliver products quicker, I could sell much more. So this is something that's constantly on my mind. How do we fix it? Um, and I have lots of projects to make that work. One is acquiring a lumber mill. So, and so I'm in some discussions with some lumber mills so that we can potentially vertically integrate and get a piece of the supply directly. Um, and that would require some financial engineering and moving a lot of moving pieces and making sure everything lines up. It's one possibility. Another is new products. So I created a lower tier product that has knots in it, right? So instead of the premium, I created a lower tier and say, okay, this one is good if you want to paint it or stain it. We don't recommend painting, but this one, if you want to stain it, you can save like 15, 20%. That wood is easier to get. And then my third option is developing my own uh, supply source. So I have actually just randomly because I like to have these things on the desk. So I have a piece of wood here that's treated in my backyard kiln that I'm building my own kind of uh, rot resistant outdoor materials. So woods, composites, premium quality things that I can get from local sources and and still fit the kind of premium model that we're building. Um, and it's a work in process, but the results are very good on my samples. So I just need to now scale it up and either get the funding or whatever. But it's to me that's what I love about buying a business is like there's a book called Buy Then Build, which most people have heard of, and that's really to me it's you're buying a platform. So it's not necessarily any different than starting a business. You can start a business from within the existing platform. So
Good.
I can start this business and I have existing customers, I have existing relationships that I can leverage. Uh,
And see, this is okay. I'm going to stop you again because I want everybody. Did you all see what he did here? One is he turned an obstacle into an opportunity, right? And as entrepreneurs, as business owners, all of our obstacles are opportunities. They're opportunities for our own growth, they're opportunities for our business growth, they're opportunities for all kinds of different things if we have the right mindset, right? And I love the fact that you came up with different ideas that will give you different results, and none of them are dependent on your current situation, right? So instead of just going, oh no, this is what my company does, we only sell, the red cedar, right? That does not need to be stained. No, you know what? We have a lot of demand. We need to grow and we need to open up to a little bit of a different market because we have the capacity and the capability of doing it. And so we're just going to be transparent about, hey, this is one offering. This is another offering that's a little bit less quality, but it's okay. Right. So I love the fact that you didn't just go, no, this is my business and that's all I'm doing. You're actually looking at it from different perspectives and what your clients need, not what you want to do. Because from the beginning, you said you love the quality, right? And that was the reason why you bought the business. But instead of staying in your own, for lack of a better word, ego, You decided to look at what does my client want? What does the customer want? What is it that I can provide them that's going to give them the same solution that they need, right? Or want, not the one that I do. So I just wanted, the audience to hear that, because you can always pivot. You can always add to your business. You can always change a little bit, because it's all about serving your clients and your customers. So thank you for that.
Yeah, no, I 100% agree. And, um, and I think that, I have two other examples, even one more with Trellis that's related to what we just talked about, and then one with NMC, if you don't mind. Um, the, the other challenge that we have is we do ship nationally, right? Um, we have customers in Hawaii, in Puerto Rico, in Canada, in Florida, in California, just everywhere we can, we have customers. We do more of our business in the Northeast because we're physically located there and we can go to customers and we can do installations ourselves. But we do have a significant amount of work all around the country. But the challenge is shipping costs are really high, for shipping big things, which limits our sales. We have lots of people who call us, from Seattle and want our stuff, and then they say, oh, 20% shipping. I don't know, well, it is what it is. It's not our cost. That's just what it costs to ship something in freight across the country. So, um, so what I and we have a maximum amount of capacity that we can do from our plant, right? So what I have been working on is building a nationwide network of other manufacturers who can kind of white label, right? Who can work with our standards. So I've reached out to lots of small builders across the country and said, hey, are you interested in doing overflow work for us? Right. And we can ship you a custom arbor. We can give you a custom arbor order in your region, maybe a couple a month or something. Maybe it's just a little extra work for you, a few $1,000s, 10,000, who knows what it could be. But, if you have extra capacity, we've got extra demand, let's make something happen. So I have a lot of ongoing discussions in that vein right now. We haven't secured any official relationships yet, but that is, and there's a lot of questions that have to be figured out. How do we do quality control? How do we, make sure, who owns the customer relationship, et cetera. But I think it solves the problem in a way that lets us scale without still like throwing more and more resources into my one plant, right? Or me trying to buy another factory in the Midwest or something, which doesn't make sense.
I
So
love that collaboration, right? Find people who can help and who actually work well with your company so that you can reciprocate. It's all about the collaboration in those relationships. And I love that you're doing that. Um, I just completely lost my train of thought what I was going to say about that. It might come back later, maybe not. We'll see. Um, but oh, yes. So talking to people, this is what I was going to say is you are trying to figure out how to delegate, not abdicate, right? Because it would be very easy for you to say, oh, here, there's builders, there's these, we'll just ship it to them and they do what they want. But you're actually asking about quality control. How do we make sure that they're installed the way we want it to be installed? How do we make sure that it stays with our processes and procedures? And that to me is looking at delegation, right? Giving those new collaborators, those new partnerships a way and a process that aligns with your company rather than just abdicating and then being disappointed in the outcome later on, or they're not doing it the way you want when you never even told them what you want, right? So Delegation is huge in business ownership, proper delegation, right? So I appreciate that you brought that up. We are coming to the top of the hour, unfortunately, and I don't
That's
want
fine.
to stop. I think these are great examples, and they're real life examples that people can take and look at and understand because they can relate to those things. So thank you so much for sharing all of that. But before we continue, how can people get a hold of you? Whether Okay, so two things. One is with the manufacturing business. If they want to have these custom, beautiful woodworkings, how can they get a hold of you?
Well, that's pretty easy. Kris, Kris, at trellisstructures.com. Or they can submit an RFQ on our site as well. But either way, I mean, I answer my email. I check it probably too often.
Okay. And then for the education piece, for the investment piece, if people are looking to buy a company and they need help, they need to figure out how to do the due diligence or what companies to look at, or they need an investor, how can they get a hold of you there?
Yeah, I'm always happy for those conversations. Whether it's a fit for NMC or not, I personally love those conversations, and always believe in kind of giving freely. So Kris, again, Kris, at newmajoritycapital.com. But if you sent it to Kris at Trellis Structures, I would still answer it as well.
Well, look at that. So if you missed that, don't worry. As always, his information and his contact information will be in the comments below and at the end of the podcast. And we might have to just have you on again so that we can continue this conversation. But before I let you go, if you could only give business owners one piece of advice that can help them succeed, what would that be?
Distilling it to one piece of advice. I mean, I think I'm going to go back to the same thing that I learned from Babson, which is one piece of advice wrapped into three sayings, which is cash is king, cash flow is queen, and change is the only constant. I think, thinking about those three things kind of frames how you look at problems, or how you reframe problems into opportunities, and how you prioritize what's important, because those cash is the most, fortunately or unfortunately, for running an ongoing business, it's the most important thing.
It is. And there's nothing wrong with making money, right? That's what makes the world go round. That's how the more we make, the more of an impact we can make on the world, the more we can donate, the more positive things we can do, right? And
Yep,
so when we open up a business, the goal is to make money, right?
absolutely.
Nothing wrong with that. That is what makes the world go round. And so thank you so much, Kris, for being here today. Thank you for your words of wisdom. I hope you all have enjoyed it as much as I did. And if you want to see Kris come back and talk a little bit more, give us a comment, let us know, and we will invite him back because I really do think that his stories, at least for me, have hit home and I can relate. And so hopefully we'll see you all again. Have a great day. Bye.